In today's episode, I'm going to give you my watch list for tomorrow and my game plan for the week ahead. We are now coming to the end of September. Monday, tomorrow, last day of September, and then we start the new month of October. You know what's very interesting about this last week? This was my best week of the entire month, but what's interesting is that this was the week that I had the most restrictions on my account because I had had a red day about a week and a half ago, and well, it's 2 red days in a row, and that caused me to sort of tighten up my restrictions, slow down, go back to basics, and wow, the results of going back to basics were I had the best week of the entire month, and it made a huge difference on the month because the problem for me was that I was a little too aggressive at the beginning of the month, coming off a really strong summer season of trading. July, best month of the year, over $200,000. August, another phenomenal month. And I thought I was just going to keep rolling with that momentum into September. But it was like September, the lights were switched off. All of a sudden, momentum was like just not there. And so I ended up over trading a lot those first couple of weeks. And if we actually look at my P&L here on the calendar, what you'll see, and let me just pull it up here for you. What you'll see is that that first week, not bad. And then second week, big red day. Third week, 2 red days. This was red after fees and commissions. And then this final full week of September, best week of the whole month, $31,449.76. Which, by the way, I was streaming the whole time during, I always stream every single day when I'm trading for members at Warrior Trading. But for those of you guys who tune in on YouTube who have perhaps been missing out, I would encourage you to check out a 2-week trial. So I will put a link pinned to the top of the comments, linked in the description, where you can trade side by side with me for the next 2 weeks, and you can get a sense of what it's really like to be in a community with momentum traders. So, all right, let's see. And then I'm going to help my little buddy here open a bag of chips. There we go. We're going to jump into this game plan here. And by the way, I'll also put a link for a free class. For those of you guys that want to just learn more about my strategy and how I trade, how I choose stocks to trade and everything else, you guys are welcome to check that out. So those links will both be pinned to the top of the comments. And for those that didn't see this latest upload right here, my 3-hour trading strategy with the highest win rate, I've been right now averaging 90% accuracy in my small account challenge, and I updated you guys on progress from day 8 and day 9. So I'm doing pretty well there. So if you haven't checked that out, I encourage you to check it out. All right, so I'll put this back up here. So as we came to the end of the week, if we look at the week in total, I had 2 days last week where I was above my daily goal of 5,000. And then I had 3 days where I was below it, although this was pretty close to it. But in total, still 5 green days in a row, which was really nice. So, a nice kind of week last week. But I did feel on Friday that things were pretty slow. And I sort of expected that. ONCO was the stock, in fact, the only stock I traded on Friday. And it closed pretty nicely. If I, really look at it, it popped up on Thursday night, pulled back, squeezed, closed high. 4 a.m. it drops, and then at 7 a.m. it spikes up to 650. So that's where I made my profit on it on Friday, but then it sold off as the day went on. But then around 10:30, 11, it sort of bottomed out at 5 and rallied back up to 6. So going from 5 to 6 over the course of like 6 hours, not a huge achievement. It's only $1 a share. But nonetheless, it is bullish that it closed as strong as it did. Is it worth watching for a continuation going into Monday? To be honest, I would say the answer is no, because it's unlikely that we're going to have volume that exceeds Friday, which did end up being a red day. It's a red hanging man candle, so a little bit of an ominous candle. Yes, it bottomed out and came back up, which is not bad, but unless it can get over $8, this is kind of our resistance right around this area, around $8. Unless it can get over 8, I don't think it's going to work. My guess is that we'll probably have something else that becomes the stock in focus for Monday morning. And my guess is that it's going to be a stock that has breaking news. Now, the first scan that we'll look at is our after hours top gainers scanner. The after hours top gainers scanner will show us stocks that we're squeezing Friday after the close, after the 4 p.m. closing bell. So ZCMD was the leading after hours gainer, and it squeezed up 64%. Not bad. It's got a 1.29 million share float. It's pretty impressive. But what's the headline on this? So let's see. This was, no, that's from a little ways ago. So let's just pull this up and see if we can identify the catalyst, if there was one, that was driving this higher. Now, it's a Chinese stock. So what we know about Chinese stocks is that they sometimes go up with zero catalyst. There is no fresh headlines on it. I'll just check SEC filings on it really quickly. So ZCMD. So nothing. There's nothing lately of news on it. So now you got a stock that kind of, probably under the radar, just after hours, spikes up from, what was it, $1.40. It just kind of caught a bid. All of a sudden it pops up, it pulls back, traders jump on it, and it goes up to 250. Ends up pulling back and closing around this level, 220. Is it worth watching for tomorrow, for Monday? Well, it's a 64% after hours squeeze. I think some people will watch it at 4 a.m. to see if it pops up and pushes higher. The float is 1.29 million shares. Does it have a catalyst? No, not a clear one, but the fact that it's up 65% by itself can become a catalyst. In a way, that's its own catalyst. So we look at the chart. Let's see, is it a recent reverse split? Not really. Is it off the all-time lows? Pretty close to it. All-time low was $1. So, we're close. I would say this is a problem here, 200 moving average at 280. That's pretty close by. So it's going to need to get above 280 in order to really have more potential. This is a stock that does have a history of making some bigger moves. We've seen them before. So, I'm not going to totally write it off, but if I'm going to be honest, I hope we find something better. I hope we find something better, because the thing is, since this has no news, I think shorts will just keep adding and adding and adding on it. The only reason they might be cautious to do that is that it's a Chinese small cap stock. And if you recall ZJYL, this was a small cap Chinese stock that in one day went from $20 a share to over $500 a share, which was really almost unthinkable. They then did a forward split, not a reverse split, a forward split. And so the stock has come back down, but it's actually because of the 20-to-1 split. It's kind of incredible. So anyways, word to the wise there, you got to be careful with these. GSIW, I can't say GSW. I always think I'm thinking of like Grey's Anatomy or something, like GSW inbound. So I don't know, $1.20 up to 180, pulled back. The thing for this, I don't think that it's worth it. The problem is you've got this sort of rally up and then this massive flush, bounce, drop. This chart's broken. This chart is a mess. It's just not worth it. So that's the backside of the move, 100%. PDSB, well, it's only up 11%. The price is a little bit better. Float's 33 million shares. That's going to be too high. And the other ones, they're not interesting either. Floats are too high. Okay, so the only one that we have so far as a maybe is ZJ. Sorry, now I forgot the ticker, and that was quick. After hours top gainer, ZCMD. So I'll put that one on my side chart over here as a possibility, but I hope there's something better. So now let's check the continuation scanner. Continuation scan here. LACE, LASE. Yeah, this one's in the top of its range. Let's see, I'm just gonna move this stuff around a little bit just to get organized. I'll go like, it's kind of, I'm gonna use my other chart here. So, it's gonna go like this. So LACE. All right, so daily chart, the thing with this is that you have a stock that's kind of near, is it near blue sky? Yeah, it is near blue sky. It hit blue sky last week, Tuesday or Monday, and then it kind of pulled back. it's a bull flag on the daily. You know, you've got the move up, you've got the pullback on light volume, first candle to make a new high. That's a daily setup. The only problem with taking a bull flag on the daily is where's the volume going to really come from? It's purely technical. A purely technical setup works on an intraday time frame because you have a daily catalyst like breaking news. But a daily technical setup doesn't usually work as well unless that stock is really closely watched, you know, like a GameStop, or it's a stock that recently made such a huge move that there's a lot of traders focused on it. I don't think that's going to be the case with LASC. Duo, the problem with Duo that I have is that this one is just too thickly traded. It really is not an easy stock to trade. I don't think it's worth messing around with. So Duo is going to be off the list as well. You look at the chart on the daily. I mean, you could see the 5 minute. It definitely rallied here. You got that nice move, but it's now stair stepping down. We're on the backside. You've got that red candle there, so it's not worth it. ATGL, this one, you know, it's interesting because it sort of, we were kind of watching it pre-market yesterday or Friday. It kind of pops up and then it's sold all the way off. Then it comes back up, sells off, and then closes back at the high, which is kind of similar to ONCO in a way. But can I really trust this? I don't think so. Make sure you don't unplug anything back there, okay? All right. So this one, I don't think I can, I don't know. Is this a Chinese stock as well? Let's just double check. ATGL. Yeah, so Hong Kong. The thing is, if it was really strong, it wouldn't have taken 3 days to rally up, and it would have garnered a lot more attention and more volume. Volume peaked, and then it went a little higher. 200 moving averages up here. I just, you know, even at this point, if we get a catalyst, it's probably going to sell off. So I don't think that's going to work. MKFG. No, there's nothing there right now. Yes, it made a big move, but it's not tradable. CAPR, I saw some traders looking at this one. Float's a little higher at 28 million shares. I think I'm going to leave it alone. RNAZ, up to 75 cents, a little too cheap. KTTA, let's just take a look at that one. A little bit of a daily setup on this. Again, that's a technical setup. First daily candle to make a new high, right? So super high volume, 57 million shares, and then the next day, 700,000 shares. That's wild. That really just goes to show like how when traders get amped up and focus on a stock, the volume is like insane. And then once the stock is no longer in play, dead. So we had, you know, we go from basically 100,000 shares to 56 million and then back to 700,000 shares. And that's also a reminder not to hold the bag on these. You know, if you don't, you just get in, get out, and if it doesn't work, don't keep holding it, because next thing you know, you're going to be holding something that has zero volume, and it's going to be hard to get out, especially if you took a huge position and you're averaging down. You're just going to make the loss get bigger and bigger and bigger. So I think the game plan for tomorrow, aside from ZCMD, which is a maybe, I think probably our best bet is going to be to watch to see what we have for breaking news. Breaking news pre-market has been working well. I know some people don't like trading pre-market. The thing is, since the pandemic, when news comes out, the markets starts reacting right away. In the past, news would come out and traders would just sort of wait until the opening bell at 9:30. But at this point, the news comes out and people are ready to trade it. They want to start trading that stock immediately because they don't want to miss out on the move, right? So when you have a stock that goes from 4 to 6 to 8 to 10, pre-market, you start seeing that and you're like, I don't want to miss the next one. So traders are really dialed in with sitting here at 7 a.m. to watch news between 7, 7:30, 8, 8:30, 9, 9:30. And then by 9:30, pretty much all of the news that was going to come out has come out for pre-market. And, you know, we might have headlines at 9:30, but not usually. And then it's kind of the morning session between 9:30 and 11 is if a stock was really strong pre-market from that initial news spike, it'll continue higher. But there are times where we get that initial news spike and then that's it. And so if we have a day like that where you get that initial spike and then that's it, then no, don't play with that. Don't play with that. Don't play with that. So you get that initial spike and then that's it. Then if you're waiting till the bell rings, then there's nothing to trade. So if you're trading pre-market, then at least you're getting to trade that initial spike and capitalize on that volatility. And then, if it goes higher, you can keep trading. And if it doesn't, then, okay. So I think we're going to continue to be in this market where as soon as news comes out, traders are responding, and that's the time to trade. That's been the case really since 2020, basically since the beginning of the pandemic. So for the last 4.5 years, that's been the case. And, in a hot market, the opportunities continue throughout the trading day and you can continue trading, which is fine. But in a colder market, all we get is that initial news sort of volatility, and then it kind of dies out. And in a really cold market, we don't even get a clean volatility at that sort of breaking news event. And that's when it's like the very slowest. But, I noticed during the month of September, a lot of traders that waited to trade during regular trading hours were struggling because we didn't have continuation, except for 2 days. We had GLMD, which gave us really great continuation it was like a week and a half ago. This one was not very clean at the open, or pre-market, I mean, but then at the open, this thing goes from $6 to $24 a share. That was our best move of the entire month, without a doubt. And then the second best one was PRTG. PRTG made a big move pre-market, but then sold off, and then made a second equally big move, or almost as big, during regular trading hours right here. So why is this? I've got to adjust this. I don't know. It's the scale is all weird. Whatever, it doesn't matter. So PRTG was the second one. But aside from those two, we didn't have a lot. And those two came somewhere in this range here. And I honestly didn't even trade them that well. So I was a little bit annoyed with myself that I didn't trade them better. But anyways, and that gave me a little FOMO, which then caused me to trade a little recklessly the next few days. So it was kind of, anyways, and I think that maybe other people experienced that as well. So my take right now is that the opportunities begin as soon as news comes out. And look, I mean, there are companies that put out news overnight, so you get an initial spike at 4 a.m. The only issue with trading at 4 a.m. is that there's not a lot of liquidity because a lot of people in the United States don't get up that early. East Coast traders, probably not. West Coast traders, almost definitely not. So you just don't have as much volume. And without a lot of volume, you don't have the liquidity to get in and out with big positions. So you might see these spikes, but when they're on 10,000 shares of volume, it's like, how many shares could I have really bought? So generally the moves between 4 a.m. and 7 a.m. are on lighter volume, which even if you were awake, you wouldn't be able to most likely take big size on it. So the amount of money you can make is sort of limited. But starting at about 7 a.m., that's when retail brokers come online, like Thinkorswim, Charles Schwab, and E-Trade and others. So 7 a.m. is kind of when the starting gates are opening right now. And so I think it really makes sense to be showing up early if you want to try to capitalize on those first moves. And then on the days when we have great volatility during those first 2.5 hours from 7 to 9:30, then by all means, I'm going to keep trading till 10 or 10:30, 11, really until things slow down. But if I can't hit my daily goal pre-market when the news is first coming out, then usually I'm not likely to hit it if I continue trading. I'm actually more likely to give back profit. So that's kind of the observation I've had here. And in fact, if we look at my metrics based on time of day, just for this month, let's see, we'll get this. So let's do last month first. So last month was a little bit interesting because I traded well between 7 a.m. and 11 a.m., which was sort of this window here. So 6 to 7, 7 to 8, 8 to 9, 9 to 9, 9 to 10, 10 to 11. And then I took 2 hours off, 3 hours off while I was teaching class. So this is where I was teaching classes. And then I came back and traded in the afternoons, and I did well. The market was so hot. I did well in the afternoons. I wonder how I did in the afternoons in July, just out of curiosity. July, I wasn't teaching classes, so I want to say, yeah, for the most part, I had a couple losses. For the most part in July, it was sort of summer. I was pretty much done by 11 a.m. and really didn't take too many trades past that. There was a couple days I did, but I didn't really too much. But then here coming into September for this month, I continued the theme from last month where I was still teaching at the beginning of the month. So I was teaching and then I was trading after I was teaching, and well, that didn't work out so well. I kept losing money. And I had some pretty big losses, here as the day went on, or as, going into power hour and into the close. This cost me $21,000. So, that's not insignificant. Now, for last week, I said, well, let's make an adjustment and stop trading past, 11 a.m. So 9 to 10 was my last hour, and I was done by 10 a.m. That just ended up being my stop. And that was partly because we didn't have a lot of really great momentum. But when we look at my profit loss ratio for the last week, check this out. 81% accuracy, $545 winners, $167 losers, $31,000 of profit. Okay, and that's just trading the first 3 hours. We go back to the first 3 weeks of the month, and the first three weeks of the month I was trading all day, from 7 a.m. until 5 p.m. And, it's not to say I didn't have any profit. I did have profit, but my accuracy was 58%. It was substantially lower, obviously drawn down by losing in the afternoons. And my profit loss ratio was substantially lower, drawn down by big losses later in the day. So, there is kind of an equation where when you're thinking about profitability, I sort of think about, of course, number one is having high accuracy, right? So the difference between 58% for the first 3 weeks and 82% for the last week is substantial. And then you've got your profit to loss ratio. So the profit loss ratio of 1-to-1 for the first 3 weeks, and then the profit loss ratio that was closer to, I guess, well, more than 3-to-1, but around 3-to-1 for the second part. That's even better, right? And then you have, I guess you could say, total number of trades. So now let's look at the total number of trades. So for the first part of the month, I took 628 trades. So 628. So, that's over 200 trades per week. So let's see how many trades I took in contrast just last week. So and I'm wagering it's going to be significantly less. I only took 76 trades. So this is sort of the problem. I went from taking 200 trades a week to only 76 trades a week. And the reason that happened was because I increased my quality standard to say I'm only trading A quality setups. Now, increasing quality standard increased accuracy, which increased profit loss ratio. And what was the total profit? So in this case, it was, so the total profit was for the first week, or $31,000 here. And for the first part of the month, I was up $15,000 a week average. So this is sort of something you wouldn't typically expect, that less trades would produce more profit. But fewer trades with higher profitability or higher accuracy and a better profit loss ratio will produce that. But then let's just say, for instance, now I want to scale up. What do I do this week? How do I scale this up? Well, I could take bigger share size on some of these trades. I was starting each day with a cap of 5,000 shares. So if I start each day with a cap of 10,000 shares, then I would just be basically doubling my starting point. In theory, that's great. But as you probably know, and what I know is that in practice, on light volume stocks in thinly traded markets, like right when breaking news comes out, there may not be the liquidity for me to jump in and jump out with 10,000 shares without getting 20 cents of slippage, which is, $2,000 of slippage. Now, hopefully that doesn't happen, but that could be a problem if I try to increase my share size. So I think that I could increase my share size a certain amount. So, it'd be nice if this was like digital so I could push this out a little bit. So one other thing that we have to add in is average share size, average shares. Now, this might be a little harder to calculate, but let's just see if we can figure it out because I'm curious. So we'll look at compare. Let's compare. We're gonna go for from just this last week. And we'll just do all, and then we'll just compare to the previous 3 weeks and just see. Let's just see what this report looks like. Oops, October. That was wrong. Let's see if the report comments on average position sizes. So, so 81% versus 51%, 76 trades versus 628. Average gain, right? Average daily volume. Well, I guess we could do it. I guess we could calculate that. So average daily volume was 438,000 shares, and I took 628 trades. So 628 trades, let's see. And that was over approximately 13 trading days, because we had no trading. No, it was 14 days. So 628 divided by 14 is 44 trades per day. 44 trades per day divided by 438,000. So we're at 10,000 shares per trade. Okay, that might be, I mean, well, that's what it says. So I guess that's about right. Okay, so then let's look at this. So then the average shares for the low accuracy period were 10K per trade. So now let's look at this period. So did 76 trades divided by 5 days, which is 15 trades a day. Did 187,000 shares divided by, so we're actually really very close to same share size. Divided by 15, average share size 12,500. So that's kind of interesting. Yes, this is 20% higher share size. Maybe higher conviction in some of the trades. Of course, remember, I started each day with 5,000 share max size, but then increased once I had a profit cushion. So I think the question here is, if I wanted to scale this up this coming week, I have sort of 2 choices. My 2 choices are, number 1, increase share size to my max share size that I feel like the market can accommodate, which is going to change in different markets. In a really hot market, there's a lot more volume in the market. We're seeing stocks with 7,500, 200 million shares of volume. So I could be taking 20, 30,000 share positions as long as I'm comfortable with the risk. In a colder market, it's not as easy. So 1 is increase share size. 2 is increase quantity of trades. If I kept the share size the same, but had 150 trades, and I still maintain this accuracy and this profit loss ratio, then I'd have double the profit, right? How do I introduce more trades? And that was kind of what I was dealing with during August and September, or beginning of September, was to introduce more trades, I have to trade longer into the day. But what I learned was that trading longer into the day was reducing my accuracy, hurting my profit loss ratio, and working in the wrong direction. So to introduce more trades, would I have to go from taking just A quality setups to taking B quality setups? If on any given day I'm seeing 15 average A quality setups, then how many B quality setups are there? Maybe there's 30. So I could increase the total number of trades potentially by 3x if I started trading B quality setups, but what would happen to my accuracy? I think we can be certain that my accuracy would decline somewhat. My profit loss ratio would decline somewhat, but there's got to be kind of a curve there where, if you're trading just, this is going to be, so total profit. And if you're trading just A quality setups over time, you're growing your account at this rate. If you continue just trading A quality setups, you're going to keep like this. If you do A plus B, you're going to be maybe like this, because now well, even if your accuracy goes down, you're still making more money because you're trading more. If you do A plus B plus C, maybe you're like this, right? Because now you've introduced too many losers. So it's kind of like, how do I optimize to get the highest equity curve possible without getting to the point where it starts to go to diminishing returns, right? And that's that balance. And to be honest, there isn't an answer that is right 100% of the time. What works right now might not work a month from now because the markets change. So you have to be constantly adapting. And this is why, to be honest, high frequency trading algorithms and trying to program AI or chat GPT to trade for you is so difficult because the markets are constantly changing. So you have to be the one who's making that decision of, okay, how do I adapt to the current market? Do I increase my share size? Do I decrease? Do I introduce the B quality setups? Do I cut them out? Because you know what? In a hot market, B and even C quality setups will work because there's just so much juice in the market. But when the market's cold, even A quality setups don't work as well. So B and C quality setups, you've got to cut them out. And this is sort of what it's all about, is being able to ease on the throttle, ease off, have that subtle touch, and to be able to recognize in real time, what is the strength of the market today? And how do I maximize on the opportunity that's in front of me today without overstaying my welcome, taking too much risk, and taking unnecessary losses. All right, so that is what I'm thinking about right here for the week ahead. I hope this has been helpful. As always, I encourage you to check out the 2-week trial, to check out the free class. If you haven't watched the episode that I uploaded just yesterday on my Think or Swim challenge, make sure you check that out because I think that's a really great episode. And I'll remind you again, as always, that trading is risky. My results aren't typical, so manage your risk, take it slow. And I will see you guys back here. I will be live streaming bright and early, 7 a.m. tomorrow morning for all of our Warrior members. So I hope you guys come check it out, and I'll see you tomorrow. All right, that's it for me. Thanks for tuning in. See you for the next episode real soon.